Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for today's show, David Blain. We thank you for joining us on 94.1 FM WNBU, Cable TV 10 in New Bern, as well as all the listeners and viewers on the internet through our website at www.dlblain.com. Of course, we're always happy to hear from you. Our email is allthingsmoney@dlblain.com. Our phone number is 252-633-0107. And as I mentioned already, you can visit us on the web at www.dlblain.com. There you'll find information about myself, my firm, as well as archived copies of the show. We encourage you to let us know what you're thinking. Do you like the topics we're covering? Do you not like them? Is there something else you'd rather we talk about? We're happy to take suggestions and answer your questions on the air. Last week we started discussing a little bit about variable annuities. I'll take you back a week or two ago, and actually this Saturday as well. I had to go somewhere on Saturday morning, and the talk shows on Saturday morning, I was just really deluged with annuity salespeople pitching their products, claiming to be giving financial advice, but really they're just disguised annuity salespeople. And it's really disheartening. And 2 weeks ago I had the idea that I think, Clark Howard certainly does not promote annuities. He's very good. Dave Ramsey also is not a very big person of annuities. But as you get into a lot of the local shows, as mine is, virtually all you hear are annuity salespeople. There are, not everyone, but the majority of them that I was listening to on Saturday morning were. And so I wanted to give an alternative perspective to these annuities to try to counter some of the misinformation and fear that they're promoting out there. But before we do, I always like to start off the show if I find an interesting article that is kind of fun on the side of finance, and this was a great one. This was from Barron's from May the 27th, and the title is "Fire Your Hedge Fund and Hire Your Congressman." And this essentially describes one of the huge problems we have today with our politicians and the markets is that most politicians get into politics to enrich themselves, not to really look out for the people that they represent. So anyway, the article starts off with, it says, "The holy grail of investing has been found. Get elected to the U.S. Congress." According to an academic study published Wednesday in the journal Business and Politics, members of the House of Representatives outperform the average stock market investor by 55 basis points a month, which that's 0.55 percentage points a month. And if you do that over a year, that's 6.8% per year after compounding. I mean, that's better than the best hedge fund. Consistently, most money managers trail the market, as you know from listening to this show, and especially after expenses are deducted. The authors of the study, Mr. Zebrowski and of Georgia State University, and James Boyd of Linwood University, Ping Chen of Florida Atlantic University, and Bridget Zebrowski of August State University, found that House members generated those excess returns during the stock market from 1985 to 2001. They said, but House members trail those of their brothers in the Senate, who annualized made about 10.7% per year after compounding. So the article goes on. I'm not going to read you anymore. This was, as I said, Randall Forsyth wrote it in Barron's on May 27th. Go look it up if you want to read the whole thing. But the essence of it, and one thing to keep in mind too, that if you look at the time period of this study, both Republicans as well as Democrats were in charge of either the White House or Congress. And so this is not a party thing. This is a governmental thing that the majority of these people get in there. They have access to information that the average investor does not. Now, keep in mind, too, that this trading was by a minority of the congressmen that participated in this study. So it was not all-encompassing. This is some private data that does not have to be released. But it's a good enough indication that we have some problems of insider trading. Maybe not necessarily illegal insider trading, but certainly advantageous. You know, they're knowing what's going on with spending bills, and as the government becomes such a huge influence and, you know, hauling members of the business community up in front of Congress in testimony, and they get a lot of information that they could potentially turn into profits, which it appears that they have. So anyway, the data strongly implies the information and influence House members and especially senators accrue is translated into personal gain in the marketplace. Obviously, there's much more studying need to be done on this, but it indicates, as many of you out there probably already know, that they probably have some sort of unfair advantage. So let's get back to what I want to cover today, talk a little bit more about the annuities, bring you up to date with where we left off last time. We were talking about the annuities and the basics of how they work and why they're promoted and why we don't think they're such a great idea. And, you know, I was thinking of an easy analogy to this, and listening to these talk shows as I was driving in my car, all you hear about is guaranteed income, guaranteed income, guaranteed income, income planning, you know, protection, all these buzzwords that are trying to play on the fear of the investing public after the previous 10 years of stock market declines. And anyone that had any sort of reasonably diversified portfolio out there has made money the past decade. If you were invested all in tech stocks or all in one type of, you know, individual company, sure, you've had a very difficult time. But anyone with a reasonably diversified portfolio has not succumbed to the markets, and in fact are ahead, you know, a good 6, 7, 8% over the past several years. So we want to dispel this fear mongering, this notion that the only way you can be successful in life in financial life is if you go out and buy these annuities that are guaranteed. What they're actually guaranteeing is very difficult to ascertain sometimes, needless to say, given the 3-inch thick prospectus that you have to wade through to even know what you're purchasing. Well, we're coming up on a break here, so we're going to cut it off here. And when we come back, we'll continue our discussion about annuities and why they may not be right for everyone. So for All Things Money, I'm David Blain.